So let's go over Unit 35, land contracts, distressed transactions, and fix and flips. So in this unit, we're going to cover, in the previous unit, we discussed mortgages and trust deeds and their foreclosure procedures. So this unit discusses land contracts and how they are foreclosed, as well as short sales, bank-owned properties, and issues related to fixing properties and flipping. So we're going to go over the following topics. We're going to go over land contracts and their foreclosure procedures, lien theory versus title theory. So yeah, lien theory, you got title theory, deficiency judgments, bankruptcy effect on foreclosure, deed in lieu of foreclosure, foreclosure with multiple liens on the property, distressed property transactions, fix and flips. Okay, so you need to do some independent research or independent studying of these slides. I'll go over the unit summary and the unit quiz. So let's go over these key points. So a land contract is also called an agreement for sale. So land contract, it's also called an agreement for sale. So if you ever hear about a land contract, what's that called? It's an agreement for sale. Contract for deed and a vendor's lien. An agreement for sale is both a sales contract and a financing agreement between the seller and the buyer. So seller and the buyer. When a land contract is paid in full, the seller delivers the deed to the buyer. So again, land contract, right? When a land contract is paid in full, the seller delivers the deed to the buyer. When a buyer defaults on a land contract, the seller may foreclose judicially or take a forfeiture action to regain the property. In a forfeiture action under a land contract, the seller must give the buyer certain statutory time periods within which to bring the payments current. The grace period may be as short as 30 days or as long as 9 months, depending on the percentage of purchase price already paid by the buyer. Arizona is a lien theory state. So we have lien theory and we have title theory. So think about Arizona. It is L, right? Starts with an L. L is lien theory. Is it a title theory? No, it's a lien theory. So however you want to think to remember Arizona, liens. We do a lot of liens on properties. Arizona's a lien theory state. Does it give a lot of titles? No, it gives more liens. So Arizona's a lien theory state. In most foreclosure situations, Arizona law prohibits a deficiency judgment if the property is 2.5 acres or less in size and used as a single one-family or single two-family dwelling. Bankruptcy of the borrower will stop a foreclosure or forfeiture process. So say the borrower is going into bankruptcy, that bankruptcy is going to stop what? Bankruptcy of the buyer will stop a foreclosure, right? If you're going into foreclosure, right, you missed 3 payments on your house and they want to foreclose on you. If you go into bankruptcy, will that stop the foreclosure? Yes. It'll stop the foreclosure process of the borrower. A deed in lieu of foreclosure is a situation in which the borrower gives the lender the property in return for cancellation of the debt, and the lender takes over the property subject to superior and subordinate liens. So superior, and then you got subordinate liens. Because forfeiture of a property may terminate a subordinate lien holder's interest, a junior lien holder has the right to cure a default on a prior lien and foreclosure the junior liens. If a junior lien is foreclosed, the property is delivered to the highest bidder, subject to any higher priority liens. In a short sale, the loan balance is higher than the property's value, right? So again, in a short sale, right? So you hear a lot of these terms. Short sale. What's a short sale? Means they owe more money than it's worth, right? The loan balance is higher than the property's value, and the lender agrees to accept a reduced payoff. So typically, say you owe the bank, I don't know, 200 grand, and the house is only worth 100 grand. So you could do a short sale, and the bank has to agree to sell it at 100 grand and take a loss, of about 100 grand, because you owe them 200 grand, and you owe them too much money, right? So they'll agree to a short sale, and it's when you owe too much money on the property. That's what we call a short sale. Think of a short sale, right? Because you're short on the payments to own the property. A bank-owned property is one that has been acquired by a lender at a foreclosure auction. So a bank-owned property is one that has been acquired by a lender at a foreclosure auction. A forbearance is an agreement between a borrower and lender in which the lender agrees to delay foreclosure. So again, forbearance is an agreement between a borrower and a lender in which the lender agrees to delay foreclosure. A loan modification is an agreement between a borrower and lender that changes the loan terms. So if you heard about loan modifications, right, it's going to be an agreement between a borrower and a lender that changes the loan terms. So there's terms, right? So in the purchase contract, you have a begin date, end date, and you have the terms, right? But if you want to modify that loan, it's called loan modification, and it changes the terms of that contract. Licensed contractors are not required to perform all improvements of the property. It is intended to be owner-occupied and not sold or leased. So again, licensed contractors are not required to perform all improvements if the property is intended to be owner-occupied and not sold or leased. Licensed contractors are required to perform all improvements if a property is offered for sale or lease, right? Or sold or leased within 1 year of completion or issuance of a certificate of occupancy, and the aggregate price of improvements is $1,000 or more. So number one, what is the minimum dollar amount of improvements? The minimum dollar amount of improvements that requires an owner who intends to sell or lease the property to use as a licensed contractor. So it's $1,000. Bravo. $1,000 is a minimum amount of improvement that requires an owner who intends to sell or lease the property to use a licensed contractor. So you need about $1,000 of improvements. A property is sold, but the legal title remains in the seller's name. What type of instrument was used to complete the sale? It's Charlie, an agreement for sale. Agreement for sale. So agreement for sale, property that was sold, but the legal title remains in the seller's name. It's a very weird one. It's called an agreement for sale. That would be the type of instrument that was used to complete the sale. Agreement for sale. So is it a mortgage? No. Deed of trust? No. Option? No. A contract to sell land or an agreement for sale is known as a Charlie, vendor's lien. So vendor, right? The vendor sells. That would be a contract to sell land called a vendor's lien. A vendor's lien is a contract to sell land, or an agreement for sale is also known as A vendor's lien. Who has legal title on a land contract? Who's got the legal title? So it's going to be it's Delta, vendor. So the vendor, right, the person who's selling it, the vendor has the legal title on a land contract. They're the vendor. They're selling it. The vendee, right, is the person who's receiving the legal title. But the legal title on a land contract, remains with the vendor until it's sold. So the vendee, no. Grantee, no. Mortgagee, no. Which of the following statements is false? So 3 single-family residents on an acre lot owned and occupied by the same family are protected from a deficiency judgment. So this is false. They are not protected by a deficiency judgment. A deficiency judgment cannot be obtained in a short sale. That is true. You can't obtain a short sale and a deficiency judgment. So say, you miss 3 payments, right? 3 months go by and you're already in a foreclosure process and a judge orders a deficiency judgment. Can then you do a short sale? No, it's too late. Single family residences on a 7,000 square foot lot are protected from deficiency judgments in a foreclosure. So this is true. Single family residences on a 7,000 square foot lot are protected from deficiency judgments in a foreclosure. Single family residents on a 7,000 square foot lot are protected from deficiency judgments in a foreclosure. True. A rental house on an acre is protected from a deficiency judgment after a trustee sale. So again, a rental house on an acre is protected from a deficiency judgment after a trustee sale. So false is the 3 single-family residences on an acre lot owned and occupied by the same family are protected from a deficiency judgment. No. S buys a property from Y, assumes an existing loan, and so S buys a property from Y, assumes an existing loan, and executes a purchase money loan to the seller. S later puts a pool loan on the property with H. If S defaults on all payments, which of the following statements is correct? This one's alpha. Unless pool lender H cures the default on the prior 2 liens, he will have no recourse against the property if the prior liens foreclose. So that is correct. So again, unless the pool lender H cures the default on the prior 2 liens, he will have no recourse against the property if the prior liens foreclose. So as a B, unless Y begins a foreclosure, H would be able to proceed against Y as the original holder of the first. No. A foreclosure by Y would eliminate all liens from the property. No. If Y accepts a deed in lieu of foreclosure, the pool lender H will have no recourse against Y. No. Arizona is considered to be a Charlie. It is a lien theory state, right? We put a lot of liens on things and we lien things out in Arizona. So, a contractor, they put a pool, and you don't pay them, they can put a lien on your house. So just think of that. Arizona, we put a lot of liens out there. We have a lot of pools, right? It's really hot. To remember this, we have a lot of pools. Pool contractors can put liens on your property. So Arizona is a lien theory state. Is it a title theory state? No, lien theory because we put a lot of liens out there. Strict foreclosure state, no. It's title theory, no. Lien theory, yes. Controlled interest state, no. A commercial building is sold in a foreclosure for $100,000 less than the balance due to the lender. Which of the following is true? It is alpha. The lender can obtain a deficiency judgment against the borrower. The lender can obtain a deficiency judgment against the borrower. B says a deficiency judgment cannot be obtained in Arizona. No. A deficiency judgment can only be obtained if the property is on more than 2.5 acres. No. A deficiency judgment can only be obtained on residential properties. No. If a property is encumbered by a first and second trust deed and the borrower defaults on both loans, which of the following statement is correct? Bravo. The second beneficiary should cure the default on the first lien. That's considered to be a lien theory state. Commercial building is sold in a foreclosure for $100,000 less than the balance due to the lender. Which of the following is true? Alpha. The lender can obtain deficiency judgment against the borrower. So that's true. So if you miss 3 payments, you go into a foreclosure and the lender can obtain a deficiency judgment against the borrower. Bravo. A deficiency judgment cannot be obtained in Arizona? No. A deficiency judgment cannot only be obtained if the property is on more than 2.5 acres? No. A deficiency judgment can only be obtained on residential properties? No. So if a property is encumbered by a first and second trust deed and the borrower defaults on both loans, which of the following statements is correct? This one's going to be Bravo. B. The second beneficiary should cure the default on the first lien to protect her lien interest. So the second beneficiary should cure the default on the first lien to protect her lien interest. So A says if the first beneficiary exercises judicial foreclosure, the second lien becomes void? No. Both beneficiaries must foreclose their liens simultaneously? No. Trustee's sale for the second lien will transfer the property to the highest bidder, free and clear of the first lien? No. An abbreviation for a bank-owned property is called what? Delta. This is D. It's called the REO. So REO is an abbreviation for a bank-owned property. So if you ever hear what's a REO, like this bank maybe owns this REO, that's just an abbreviation for banks that they went into foreclosure probably, and they own the bank owns this property. It's not owned by a regular person. The bank doesn't want to own properties, by the way. So so the REO answers this question. Typically, what's going to have to happen is maybe when in a foreclosure, you miss your payment for 3 months, then you go into foreclosure. The bank is going to order that foreclosure, that judiciary foreclosure, and it's going to be called a REO now. Why? Because a bank owns it. So that's why a REO is a bank-owned property. So if you see on social media, Facebook or something like that, and they say this is a REO property, that means a bank owns that property. Number 11, if a land contract contains an acceleration clause that the seller elects to exercise in event of default, the what? Delta, seller may foreclose as in a mortgage. So seller may foreclose as in a mortgage. So if a land contract contains an acceleration clause, which most contracts do, right? If you sell your, or you change the name of your title, then the acceleration clause can become due on demand. But if your land contract contains an acceleration clause that the seller elects to exercise in event of a default, the seller may foreclose as in a mortgage, right? That's pretty much what an acceleration clause does. It allows the seller to foreclose as in a mortgage. Seller may declare the equity of the buyer forfeited immediately. No. Seller may pursue the forfeiture procedure as provided by law. No. Acceleration is not valid in agreement for sale. No. In title theory states, so we know Arizona is what? It's a lien theory. Why? Because we have a lot of liens in Arizona. Say a lot of pools. A pool contractor can put a lien out there. So we're not a title theory. We're a lien theory state. In title theory states, what happens? Charlie, mortgagee retains the title. So you buy a house, you're not the mortgager, you're the mortgagee, and that's in a title theory state. In a title theory state, the mortgagee, which is the buyer, the purchaser, they retain the title, right? That's in a title theory state. Title theory, when you're buying the property, you retain the title. In Arizona, that is not the case here, right? In Arizona, you don't hold the title. Who holds the title? The bank. So you don't get the title until you've paid the entire house off. All right, so A says mortgagors retain legal title. No. Borrower has no right to title. No. Mortgagee retains the title. Yes. That's in a title theory state. We're not a title theory. Arizona's not a title theory, so you don't have the title when you get a loan on a house. D, legal title is held by a neutral third party. No. 13, a deficiency judgment can be obtained against an owner of which of the following properties? Delta, owner occupied fourplex. Owner occupied fourplex. Owner occupied fourplex. So in an owner occupied fourplex, a deficiency judgment can be obtained against an owner of which of the following properties? An owner occupied fourplex. A is owner occupied single family residence on less than 2.5 acres. No. Owner occupied duplex on less than 2.5 acres. No. Non-owner occupied single family residence. No. 14, in what situation would a short sale be likely? C, the loan balance is greater than the property value. That's literally the definition of a short sale. So if you'll go on Facebook, you'll see sometimes this house is a short sale. What's a short sale? That means you owe more money than it's worth. So the bank says, they're probably not going to get their money, so they'll take a loss and they'll do what's called a short sale. So you'll sell it at a loss, and because you owe too much money, and they'll sell it. So say it's worth $200,000, then they sell it at $100,000. They're selling it at a loss, right? Because they know the value is actually $200,000. You owe $200,000, but they'll sell it for $100,000. So that's a short sale. So see the loan balance, right? How much you owe, the loan balance is greater than the property value. You owe way more money than what it's actually worth. So A, the loan balance is less than the property value. No. The loan has a non-recourse provision. No. The total of all liens is less than the property value. No. In 15, in which of the following situations would the lender have completed a foreclosure? Bravo. B, an REO transaction, right? So what is a REO? A REO means a bank-owned property went into foreclosure. The bank owns it now. That's a real property. So in a REO transaction, which is the following situation would the lender have completed a foreclosure? That's a REO transaction, right? So a REO transaction, a bank-owned property, and the bank owns this house now, and that's called a REO transaction, where you basically lost your house to the bank because they did a short sale and you lost that property. That happens when people cannot pay their mortgages and they miss 3 months consecutively, and the bank doesn't do that. Now you can apply for bankruptcy, and then that'll pause that foreclosure. So is it short sale? No. Lender forbearance? No. Loan modification? No. In relation to a deed in lieu of foreclosure, all the following are correct except what? Bravo. It eliminates all lower priority liens against the property. So in relation to a deed in lieu of foreclosure, all of the following are correct except Bravo. So does it eliminate all lower priority liens against the property? No, it doesn't eliminate the lower priority liens. A deed in lieu of foreclosure does not lower priority liens. Is it considered to be a voluntary alienation of the property? Yeah. Voluntary, that's a deed in lieu of foreclosure. So foreclosure, it's not you don't volunteer for foreclosure. But a deed in lieu of foreclosure, that is a voluntary alienation of the property. The lender accepts it to reduce the cost of foreclosure. That's a deed in lieu of foreclosure. The lender is not required to accept it. Yes. All right, 17. In which of the following situations would a licensed contractor not be required to do the work? Which of the following situations would a licensed contractor not be required to do the work? So this is Bravo. Adding a storage shed and garage to the contractor's personal residence at a cost of $20,000. So this is the following situation would a licensed contractor not be required. So licensed contractor, if you add a storage shed and a garage to the contractor's personal residence at a cost of $20,000, they're not required to do that work. Remodeling recently acquired property to improve it for immediate resale? No. I'm sorry. Yes, they would be required to do the work in that case. Fixing a property with intent to sell it if the cost of the painting is $800 and the cost of the new landscaping is $900. Right, as long as it's less than $1,000, then the contractor is required to do that work. Building a new home that is sold within 7 months of issuance of a certificate of occupancy. The licensed contractor is required to do the work. A husband and wife purchase a piece of unimproved vacant land with a 60% loan. A year later, they divorce, and the husband signs a quitclaim deed to the wife. So the quitclaim deed, right, just gives her the deed. So a quitclaim deed. And she records the document. 6 months later, the wife is unable to make the payments, and the lien is foreclosed. The property sells for less than what is owed. Who can the lender go after for the deficiency judgment? So this one's going to be Charlie, both the husband and wife. So there's a big misconception here. So how come the husband is involved here, right? Why is the husband still on the hook with this deficiency judgment? Well, the husband took out so a husband and wife purchased a piece of unimproved vacant land. So it's not a single family home, it's an unimproved vacant land, and they got a 60% loan. A year later, they divorce, and the husband signs a quitclaim deed to the wife, and then she records documents. 6 months later, the wife's unable to make the payments, and the lien is foreclosed. The property sells for less than what it is owed. Who can the lender go after for the deficiency judgment? Because this is an unimproved vacant land, that husband is also still going to be, even though they got divorced and he quitclaim deed over to her and it's in her name now and removed his name, both husband and wife still can be the lender can go after in a deficiency judgment. So is only the husband? No. Only the wife? No. Neither deficiency judgment cannot be obtained? No. A property has both a first and a second lien. Both are in default, right? First and second lien. Which of the following statement is true? Answer is alpha. The second would be terminated if the first goes through a successful judicial foreclosure. The second will be terminated if the first goes through a successful judicial foreclosure. Number 20, a property has a second mortgage and a valid property recorded first mortgage. If the liens are foreclosed, under what circumstances would the second mortgage holder be paid before the first? Delta, if the first mortgage holder had signed a subordination agreement. So if the first mortgage holder had signed a subordination agreement, that's when a property, right? That's when a mortgage holder can be paid before the first. So again, a property has a second mortgage and a valid property and a valid properly recorded first mortgage. So they recorded the first mortgage. If the liens are foreclosed, under what circumstances would the second mortgage holder be paid before the first? So typically, you pay the first person first. Whoever records the second mortgage gets paid next. But if the first mortgage holder had signed a subordination agreement, then that the person under that subordination agreement would get paid first. Liens on a property exist as follows. So delinquent property taxes, $5,000. First deed of trust, $150,000. Second deed of trust, $50,000. If the second deed of trust is foreclosed, how much money must the foreclosure sale bring in order for the second deed of trust beneficiary to be paid in full? Answer is alpha, $50,000. So $50,000. So this, so again, a lien on a property exists as follows: delinquent property taxes, $5,000. So the guy owes $5,000 property taxes. The first mortgage they got was $150,000. The second mortgage they got was $50,000. If the second deed of trust is foreclosed, right? So you got the first 150, and the second one's foreclosed on. How much money must the foreclosure sale bring in order for the second deed of trust beneficiary to be paid in full? Well, you need that second deed of trust to be paid, which is $50,000. If an owner improves a property, a licensed contractor is required to be used in all of these situations except if the property what? If the property delta D is owner occupied for more than 1 year. So if it's owner occupied for more than 1 year, if an owner improves a property, right? So say, for example, you're at your house, you improve the property, a licensed contractor is required to be used in all these situations except if the property what? Is owner occupied for more than 1 year. So I did a room addition on my house, right? Do I need to pay licensed contractors? No. I've been here for 6 years and I'm the owner. So if it's owner occupied, I can be the GC, the general contractor, right? I don't need a licensed contractor if I'm doing it for my own residence. If I'm doing it for somebody else's residence, yeah, then you need licensed contractors. So will be sold within 1 year? No. Will be leased within 1 year? No. Is sold within 6 months? No. Which of the following would not be part of an agreement for sale? C, Charlie, trustee's notice. So in a trustee's notice, right, you got the trustor and you got the trustee. Trustor gives it to the trustee. The trustee's notice, right, that's not part of an agreement for sale. That would not be part of an agreement for sale. So A, statutory notice, yeah. Account service agreement, yeah. Forfeiture rights, yeah. Trustee's notice, no. When a deed in lieu of foreclosure is given to a lender, right? So you got this deed in lieu of foreclosure. They give it to a lender. Which of the following is true? C, Charlie, right? Time and costs are less. So which of the following is true? The time and the costs are less. Redemption rights remain. No. Subsequent liens are paid off. No. The borrower would still be liable for the loan in foreclosure. No. Its time and costs are less. A commercial property is sold at a foreclosure sale for $10,000 less than what is owed. To recover the loss, the lien holder may what? Alpha A, sue the mortgagor. So you can sue the mortgagor. So again, a commercial property is sold at a foreclosure sale for $10,000 less than what is owed. To recover the loss, the lien holder may sue the mortgagor. So, you give a loan to someone and you expect them to pay it back, right? So you give them a loan for the 100,000, you're the bank, and you do a short sale, right? Say it's only worth 50 grand, right? And they still owe, say, 90 grand. Well, you sell it for the 50 grand and you're owed 90 grand. So the other 40 grand you owe, how can you get it back? Well, you sue them. You go to the judge, sue them, take them to civil court, and you can sue the mortgagor. B, not sue the mortgagor? No. Sue the title insurance company? No. Sue the mortgagee? No. When a deed in lieu of foreclosure is accepted by the lender, what happens? Bravo, lien on the property is canceled. Lien on the property is canceled. So, you're going into foreclosure, right? But instead of that, you put a deed in lieu of foreclosure, and the lender actually accepts that deed in lieu of foreclosure. So B says the lien on the property is canceled. So you have no more lien on it, right? It's canceled. A, lien on the property remains in effect. No. Subordination liens are eliminated. No. Property taxes must be brought current. No. The forfeiture period on a land contract is, bravo, a specific statutory period of time. So a specific statutory period of time, that's the forfeiture on a land contract. Forfeiture period on a land contract is a specific statutory period of time. Oops. Which of the following would not occur in a forbearance? Which would not occur in a forbearance? It would be Delta D, foreclosure. So foreclosure would not occur in a forbearance, right? Because what is forbearance? Forbearance is you're asking to delay your payments. So they put you in forbearance. So like me, I have a student loan, for example, and I go into forbearance because I can't pay the loan. So they just extend your time. They put your payments on pause and you extend out your time, right, until you can get a better job or something like that. But you wouldn't go into foreclosure because that's what forbearance is. They give you more time to make your payments. It's called forbearance. A lot of students go to college, they'll go into forbearance because they can't pay their student loans right after they graduate because they need to find a job. But foreclosure wouldn't happen if you go into forbearance. So workout, no. Deferment, no. Moratorium, no. Last question, 29. If an addition to a commercial property was made more than 10 years ago without a building permit, what happens? Charlie, C. The government could require the owner to obtain a permit retroactively. So, you gotta make sure you do additions on commercial property with licensed contractors, because say again, this question, if an addition to a commercial property was made more than 10 years ago and they didn't have a building permit, well, they can go to a judge, and the judge can order a permit to be retroactively done. So the government could require the owner to obtain a permit retroactively to bring whatever that addition was made, like a room addition or more rooms, to be, make sure it's up to code. So A says the owner is not required to do anything as statute of limitation for permits has expired. No. The property could not be sold without the seller obtaining a permit. No. The addition would be required to be demolished. No. 6, Arizona property taxes. So we're going to go over taxation is one of the 4 government limitations on ownership. This unit discusses many of the details regarding Arizona property taxes that a real estate broker should know. Also included is taxation math. So the unit covers full cash value, right? So the topics is going to be full cash value, limited property value, tax calculation formula, assessment ratios, tax levy and payment procedures, delinquent tax lien auctions, community facilities districts, and real estate tax math. So I'll just do some independent studying. I'm going to go over the So let's go over some of the key points. So property taxes have number 1 priority over all liens. So if you could say which has the highest priority on liens, always property taxes. You always want to pay off your property taxes. Always. I have an uncle, and he lost his house because why? Because he didn't pay his property taxes. How often, or when you need to pay your property taxes? Always. So they're the highest level of priority. They take precedence over everything else. Ad valorem means according to value. So if you see the term ad valorem, that means according to value. Ad valorem, according to value. The full cash value, FCV, is the value placed on the property by the county assessor. So the full cash value, who's it placed by? The county assessor. Full cash value is the value placed on the property by the county assessor. Owners may appeal the full cash value with the assessor. If you want to appeal the value of your property, you should talk to who? The county assessor. If the appeal to the assessor fails, the owner may appeal to the State Board of Equalization and then to tax court. So for partially complete buildings, the owner may receive a supplemental notice of value. The limited property value, LPV, is the basis for all property taxes in Arizona. The limited property value may not increase more than 5% per year and may not exceed the FCV, full cash value. So again, the limited property value, LPV, limited property value, may not increase more than 5% per year. So that's why you typically see like a steady increase in your property taxes it'll go up, but it shouldn't go up more than 5% per year. And it may not exceed the full cash value. The formula for calculating taxes is the following: limited property value multiplied, so LPV times assessed value assessed value ratio equals the assessed value times the tax rate, which equals the real property taxes. So if you want to calculate formula for calculating taxes, right? So how do they come about on your property taxes? Well, it's limited property value, LPV, times the assessed value ratio. That's going to be equal to the assessed value multiplied by the tax rate, which is going to be equal to the real property taxes. The assessed value ratios are set by state law and are 10% is owner-occupied residential property, it's class 3. 10% is the residential income property, class 4. 15% is vacant land, which is a class 2. And 18% is commercial property, which is a class 1. So this is the assessed value ratios, right? Again, they're set by state law. So assessed value ratio set by state law: 10% owner-occupied residential, class 3. 10% is residential income property, class 4. 15% is a class land, vacant land, which is a class 2. 18%, which is a commercial property, which is a class 1. So you can see the lowest percentage of the assessed value ratio is going to be what? Residential property, single family homes. And the highest is going to be what? It's going to be commercial property, around 18%. So commercial properties are called class 1, residential, it's called class 3. So on a class 4 property, the owner must file a residential property registration form with the assessor. So on a class 4, which is residential income property, which is assessed value at 10%. So on a class 4 property, the owner must file a residential property registration form with the assessor. Taxes are levied annually and become a lien on January 1st of each year for the coming calendar year. Taxes are paid in arrears, and they're paid semi-annually. The first half year's taxes are due on October 1st, and they're delinquent on November 1st. Right? So when are they due? October, right? Halloween, that month they're due on October 1st, and they're going to be late on November 1st. The second half year taxes are due on March 1st of the following year, and they're going to be delinquent on May 1st of the following year. So the second half year taxes are due on March 1st of the following year and delinquent on May 1st of the following year. The tax reduction for state aid to education allows homeowners, it's class 3 property, to pay a lower tax than owners of other property classes. Delinquent taxes accrue interest at 16%. So delinquent taxes accrue interest at 16%. That's incredible. So, if you don't pay your taxes, what's the interest rate they tag on? 16% interest rate for not paying your property taxes. Nowadays, usually when you're paying your mortgage, the property taxes is a part of that bill. Delinquent tax liens are auctioned annually in February. The winning bidder receives an electronic certificate of purchase, CP called certificate of purchase, from the treasurer. After the auction, the property owner has 3 years to redeem the tax lien. So again, after the auction, the property owner has 3 years to redeem the tax lien. So if someone wants to buy your house, say you didn't buy, so my uncle, he didn't pay his taxes, right? Here's just some story, and someone pays his taxes, so they're going to get his house. He could come back and get his house, within the first year, within the second year. After 3 years, he can't reclaim his property by paying his own property taxes. So you can, it's still not a big loss until 3 years, right? So you got 3 years to get that money to pay your property taxes. If the owner does not redeem, the CP holder, the certificate of purchase holder, may foreclose to acquire the property. So even if you don't pay your taxes and that certificate of property, the CP, he still has to foreclose to actually get the property. A community of facilities district is a special taxing district created to finance public infrastructure. So number one, taxes are levied or they become a lien when? This is C, annually. Every year, the taxes are levied or they become a lien on the property. So you got 1 year to pay your taxes. If you don't pay it in 1 year annually, then what happens? There's a lien on your property, right? And then someone can pay your property taxes and they can force you into foreclosure and they can take your property. But you got 3 years to pay that lien if you don't pay it. So taxes are levied biannually, no. Semi-annually, no. Annually, yes. Each September, no. At the time a lien is sold for taxes, the winning bidder receives a treasurer certificate. So a treasurer certificate is what the winning bidder receives at the time a lien is sold for taxes. So a lien is sold for taxes. The winning bidder receives a treasurer certificate. So if you don't pay your property taxes, that winner will get a treasurer certificate. Will he get a treasurer's deed? No. Sheriff deed? No. A sheriff's certificate? No. He gets a treasurer certificate. A lien is sold to recover delinquent taxes. The statutory redemption period after the tax foreclosure sale is, Charlie, 3 years. That is the statutory redemption period after the tax foreclosure sale. So a lien is sold to recover delinquent taxes, 3 years. Former property owner in Phoenix dies intestate without no will. So intestate, no will. The city of Phoenix is acquiring the deceased person's property through eminent domain. The county has sold a tax lien on the property, and the certificate holder is filing a quiet title action. Who receives the money for the back taxes? Delta, the tax lien certificate holder. Tax lien certificate holder. So who receives the money for the back taxes? The tax lien certificate holder receives the money for the back taxes. So is it the city? No. The county? No. State? No. The tax lien certificate holder. So whoever bought the tax lien, the holder of that, the tax lien certificate holder, is going to receive the money for the back taxes. A Class 2 parcel has a full cash value of $100,000, limited value of $90,000 if the tax rate is $18.50 per $100 of assessed value. What are the annual taxes? Answer is Alpha $24.97. Need to do some math on this. Number 9, which of the following property classifications requires the owner to file a rental property registration form with the county assessor? It's going to be Delta, Class 4. Which of the following property classifications requires the owner to file a rental property registration form with the county assessor. It is a Delta Class 4. So Class 4 is the property classification, right? A Class 4 property classification requires the owner to file a rental property registration form with the county assessor. When a delinquent tax lien is sold at auction, the proceeds go to the county. So county is where the proceeds go to when a delinquent tax lien is sold at an auction. In Arizona, the tax assessment rate on a single family owner occupied home is 10%. So 10% in Arizona is the tax assessment rate on a single family owner occupied. 10%. The interest rate on delinquent property taxes in Arizona is 16%. So if you don't pay your property taxes, the interest rate they're going to charge you on delinquent property taxes is 16%. And if it's an owner occupied, the tax assessment is 10%. In Arizona, which of the following property classifications has the highest assessed value ratio? It's going to be Delta, vacant shopping center. Why? Because it's a commercial property. So residential is going to have the lowest tax assessed value tax ratio, and commercial property is going to have the highest assessed value ratio. So the more money you make, the more they tax you. It's pretty much how it goes. And the more, if it's a business, they tax you even more. So owner-occupied residential, no. Fully occupied apartment building, no. Vacant land, no. The delinquency dates on real property taxes are when? Alpha delinquency, right? So November 1st and May 1st. So November 1st is a delinquency date on real property taxes. November 1st and May 1st. Is it September 1st and March 1st? No. November 1st and March 1st? No. September 1st and May 1st? No. 15. Real estate taxes are due when? Real estate taxes are due Alpha March 1st and October 1st. So real estate taxes, when they're due, March 1st and October 1st. Who is not involved in an appeal of a property's full cash value? Who is not involved in an appeal of a property's full cash value? Be Delta, county treasurer. County treasurer. So the county treasurer is not involved in an appeal of a property's full cash value. Who is involved? Is it the county assessor? Yeah. The state board of equalization? Yes. The tax court? Yes. Is it the county treasurer? No. Taxes are paid in arrears and become a lien in advance. So taxes are paid in arrears and become a lien in advance. Alpha. They become a lien in arrears? No. October? No. March? No. In advance. To finance the infrastructure for a subdivision development, Arizona law allows the formation of what? So to finance the infrastructure for a subdivision development, Arizona law allows the formation of Delta, community facilities districts. Community facility districts. So community facility districts is to finance the infrastructure for a subdivision development. Arizona law allows the formation of community facilities districts. Is it homeowner association? No. Planned communities? No. Planned unit development? No. The charges for a community facility districts are found on Bravo property tax bill. On your property tax bill. So on the property tax bill is where the charges for a community facilities district is found on the property tax bill. Is it the notice of full cash value? No. HOA dues invoice? No. Special assessment notification? No. Vacant commercial land in Arizona is taxed at what percent of value? Bravo. So 15. So vacant commercial land in Arizona is taxed at what percent of value? So 15%. Vacant commercial land is taxed at what percent value? 15%. In Arizona, taxes become a lien against real property on Delta January 1st. In Arizona, taxes become a lien against real property on January 1st. So is it March 1st? No. October 1st? No. November 1st? No. Which is true? To receive a reduction in property tax for state aid to education. It is C. An owner-occupied condominium will qualify. Owner-occupied condo. So this is to receive a reduction in property tax for state aid to education. Is it the property must be owner-occupied for at least 3 years? No. An owner-occupied condo will qualify? No. The property may apply for class 4 property tax test? No. The lien with the highest priority in Arizona is the alpha property tax lien, right? So you got to pay property tax lien. That's the highest priority in Arizona. Which of these property classifications is used for owner-occupied homes? It's going to be Charlie, class 3. Class 3 is the property classifications used for owner-occupied homes. Owner-occupied homes, class 3. All right, next up, we're going to go over Unit 37. Assessments, mechanic liens, and homestead exemptions.